Stocks fall for the second straight day as the euro hit major technical resistance. Spain sold 4.6 billion euros as their yield remained lower. Apple's above $700 per share as the market digests the impressive gains. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the morning call. Markets are down for the second day after a lot of oscillators were overbought on Friday. Scott, what do you attribute this to?
I just think that we've had a huge run. Markets, up almost 100 handles in the last few weeks. And then on Friday, finally, the oscillator was extremely overbought. The RSI was screaming, at levels that we've only seen maybe once or twice before, even this year. I don't even know if we saw those levels this year. So with that said, a nice 1 to 3 day pullback controlled so the moving averages can catch up, I think is very, very healthy.
We're hearing buzz about China and Japan, Spain, all these headlines. What are the headlines that you're most concerned with right now?
Well, I think that the tensions between China and Japan are a little new. We haven't seen that kind of headline in a while. And then as far as Spain and Italy, the markets just want Spain to come out and ask for the funds. The Rajoy administration is being a little coy to the fact, or playing politics, before it asks, because that the conditions are going to be there and they have to have these conditions so the problems don't exist in the future. But anyway, I think the yields are still in check, and it's just a matter of what's it going to take for them to come to the table and then finally even get the Greece conditionality out of the way.
So what are the levels you're watching right now in the S&P?
So let's take a quick look at what I do and what I watch, which is the chart. So let's go to the S&P, which has had an enormous run. You want to start all the way down here from October 4th, and then this methodical, pattern-driven tape all the way to where we were yesterday. Here we are. Let's take a closer look. Anytime that we've gotten very extended from the 8-day moving average or the 21-day moving average, we come in a little bit. And if you look at this move pretty much ever since this June 4th low, we've been following the 8 and 21, following the 8 and 21, and then more recently we've been just following the 8-day. So that's something that I'm watching. The 8-day right now is at 1445, playing some catch up. It's probably going to move up again today. I would think that maybe 50% of this bar holds. If 50% of this bar does not hold, then maybe the speed of this rally changes. So for right now, I'm going to be covering my overlay short probably today, hopefully into this 1450, 1453 area. And then as the 8-day plays catch up, I'll look to see if I can put back more longs on, and my overlay short will be out of the way. Who knows, maybe they really shake up the tree and it comes in and retests this breakout at 1440. It's a little bit bigger. But then again, the 21 days all the way down here. So after an impressive move like we've seen, if we want the speed to stay fast and shorts to be pent up, we hold 1450-ish. Here's your 8-day and there's your 21-day. And this will be the flag that develops, kind of like we had right here before we went again.
Well, speaking of impressive moves, the financial sector took a well-deserved rest after recent impressive moves it's seen in the past 2 weeks. Banks were the first sector to pull back on Friday. I know you used a cute short on Goldman on Friday. Now are you looking to add or cover?
On Goldman, I covered a little bit yesterday, and I'll probably cover the rest of it today. Now, what you said is important. On Friday, a leading group pulled back first. That's what traders look at in order to adjust their positions. So as the XLF traded off its highs first, or gave a little bit of a hammer top, it was giving me some conviction maybe to add to some spider short, sell some longs, and just get ready to switch some gears and wait. So if you look at the chart of the XLF, you will see, this was your last buyable move. Okay, when it broke above this area on, actually this was September 6th, and Goldman led the way September 5th. Then you had a nice flag type pattern giving you continuation right here. But then again, just like everything else, look how far away from the 8-day. You combine that with a bit of a hammer top, and there's yesterday's down day. Today we're going to open down a little bit. If you are short the XLF, maybe cover into this. If you're looking for a more strategic entry versus chasing here, this would be a very good area to hold. And I think you did mention Goldman Sachs, so I'll get right into it. Goldman Sachs also, if you saw the day the XLF broke out, that was September 6th. This one broke out, look at my little quotron right here, on September 5th. So this was a leading stock telling you that the banks are ready. You had a move, you flagged, and then finally, a bit of a doji top here. So I tried to get short after losing short around here. And then, it down a little bit. This is the 8-day. This is 117 and change on this third down day. I'll probably cover and then see if it gets stabilized and then provide leadership for the banks once again.
Yeah, Goldman yesterday had a pullback of about 1.2%, but even experiencing a smaller loss was JP Morgan that pulled back less than 1%. You think the damage is contained here?
Yeah, and I think that this dip is viable as well. I said an interesting note that I wonder what would have happened if that big whale trade didn't get exposed, because they were forced to cover that trade at the bottom of the market. The media was all over them, everyone was all over them, and that was over the summer. So I think there's a good story there if the media is watching this. Go look to see who broke those stories and if anybody on the other side of the trade helped that cause. But anyway, away from my conspiracy red dogism, here's a chart of JP Morgan. This one was a really good vehicle for us, as on this day when it was really tight, that's when Goldman broke out. So off the charts and the price point sheet, we listed JP Morgan. That was the day I added to my longs here around, what was it? This was like 37.45. Flag continued. I have no JP Morgan, so for me, a pullback would be welcome, and I'd be looking to buy it a little bit closer to 40.
Now, what about Wells Fargo? Saw a bigger loss yesterday, closed down over 2.2%. It hit a new 52-week high on Friday, so was yesterday's action healthy?
Yeah, and as you said, a 52-week high and bank in the same sentence, and a major bank like Wells Fargo. So for investors here, I think this has been more of a slow, steady investment. I don't see, my traders don't usually get back in Wells Fargo because it doesn't move as quick. If you look at the chart here, you will see, it just broke out. So what I'd like to see, I might even actually look to this to see if it provides leadership, the 8 days right here. So if this could hold, just say right around 35 and continue, could be good. What I don't want to see is I don't want to see it break out and come back into the space. Breakout failures to me are distribution, and we want to measure the fact that that doesn't happen. So holding higher, holding above 35 would be very healthy. So if you're not in Wells Fargo and you didn't chase that 2-day excitement, this is your spot to look to buy some right around here.
Bank of America was hit the hardest, losing almost 3%. The stock is still trading above all key moving averages. How much further can it potentially pull back?
I think the 8 days right around $9. Maybe it pulls back a little bit before that, but again, great vehicle. Bloomberg, we talked about having a call spread through the fourth quarter, and it tweeted about the fact that it already met its full potential. I think it was a double. Anyway, you look at the chart of Bank of America, just like everything else, big move from this triangle pattern. Boom, all the way to finally a doji top. So trading down yesterday was something that, did not surprise traders. Here's your 8-day moving average. So again, the theme here is, can you buy the 8-day moving average? I think you can. That's what we've been riding, and let the 21-day catch up. And this type of digestion is good. So if you want to get Bank of America and you don't have it here, you sold the strength around 970, you have the luxury of buying back around $9.
All right, we're checking in on high beta tech, which is still acting well. Right after this quick commercial break, we'll be right back.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
High beta tech still continuing to act well, especially Apple, now above 700. Scott, tell us, what is your position like here?
Well, I re-energized my position the day of the launch, or when they had all the media coming in and they sold it off 2 days before, then it took off the last 30 minutes of the day, and I've been long ever since. So 4-day hold from about, 670-ish to over 700. That's a nice trade. I do intermediate trends. If you're a macro investor, you know what? You're doing a lot better than me. You've been holding this thing for a long time. And 700's a milestone. It's always funny how these things trade around their milestones. It's opening up above it. Does it come back in and hold it? If it does, maybe you get an extension into, 720, 730. I don't think that happens today. But, you look at the chart here, you'll see, a few different entries here. If you didn't hold on earnings, this was your entry right there. For me, I waited to see the commitment here. This was my first intermediate trend trade. I think we held it this entire time, got out right around here, and then, again right there. So we're allowed to, not trade the noise or be in for the noise and get in for the movement. And at this particular point, you look at how it closed on the highs, just for a lesson, the day of, the product announcement, and then boom, gap up, through resistance, continuation. Yesterday, the market was down. It closed on its highs. Good book says to take it home long. The question now is, where does it go today? And at this particular point, nobody really knows. So we'll monitor the action. I do think at some point, if it's not today or in the next few days, it's going to be a lot higher this year. So as a macro equity investor, stay the course. As an intermediate trader, I think this is actually on day 5, not 4. You always trim some, and I will most likely have less tonight than I had entering today.
Okay, and Google building a base at highs, but see some selling pressure when it hits resistance at 713. So at what level would you consider getting involved?
Yesterday I put on a feeler again. I've been trading this back and forth a few different times. The best thing here again was to be a macro equity investor versus a trader. So it just does also show you can be a stock picker. But if you really watch these things closely, it started to go after earnings, and after it triggered through 620, 645. Then if you remember on the morning call when the Samsung victory happened, everyone was selling Google into 665. We said buy it. Anyway, you look here, or look at the chart, or I don't think, maybe we wouldn't say buy it, but we said watch this area here. And then the next day we had it on the price point sheet when it went above 672. So here we are higher, right at resistance. I'm long a little bit. I think you can get a nice trade here. If this starts trading through 712, 713, the market goes from negative to positive today, this is something that could provide you some cash flow for momentum. You go to your monthly chart, I do think at some point this year, we will be testing and taking out the historic highs of 747. Just not exactly sure when, so as a macro equity investor, stay the course here. Google's chart looks beautiful.
Beautiful. All right. And Amazon took a break yesterday after making a new all-time high on Friday. So what levels are you watching for Amazon?
Amazon hasn't been as spirited. It's been a little trickier, but it's been, there are days to get involved. And as it comes back into the 8th day, that could be a day. So I'll look at it today. You go to the chart here, you will see it ignited after earnings, and that's what healthy stocks do, and that was right here. We talked so many times about 228, 230. Boom, here was your trade. And then it pulled back and tested it and held it. Then remember this little 2-day trade. And since then, it's been following the 8th day all the way up. Last little flag pattern, 2-day pull into the 8th day. The 8th day has been holding. So today, I'm going to see if there's a trend change. It's opening down. I'll buy a little bit. And then if it doesn't hold here, I guess it could pull back down to, the 21-day. It is quad witching, and I know there's a lot of options open, here. So we'll see if that transpires. Again, we're looking to see if composure changes. Composure could be speed, composure could be trend. For right now, the 8th day is something that these things are riding, so I'm going to keep looking at them there. And if it does change, it goes to the 21-day, it's still fine. Typically, stronger stocks hold their 8 and 21-day, and recently it's been the actual indices.
Now, how does this strategy apply to Baidu? Because Baidu sold off yesterday, gave back most of Friday's gain. It did hold above the bullish gap from Friday's open, so is it time for buyers to step in?
This one is so tricky and so hard to handle that we've been saying as an investor, do not look to get involved here. It's too tricky as a trader. We're even having a hard time because of the composure changes and the lack of liquidity sometimes. So at this particular point, if you take a look at Baidu, you will see here, this is when it broke. It was acting actually pretty well in July, and then boom, this 2-day potency told you something was wrong. So the rest of the market did not do this. And this was, I think, a higher level stop that guys did use. And since then, it's just been methodically going lower. You did get a gap up here. We were talking somewhat, off the charts about this descending little channel here that finally broke to the upside. I guess you can say, it's holding this gap. So today, if it could hold above, 111-ish, you try and buy it, see if there's any relative strength. But overall, this has been dangerous and hard to handle. So there are a bit of easier things out there.
And LinkedIn holding up well after recent impressive moves. At what levels do you like this stock?
This is one of them that's been acting better. Also a little sloppy, but we've talked for like 3 to 6 months already on how this is gaining institutional support and trust. They've had now 3 quarters in a row where they were solid. And recently on the last quarter, you had a few days of up action, then it held the gap, and then it just made historic highs for itself. Typically, you get the biggest winners from the new issue market within the first few years. So this has all those type of ingredients. You look here at the chart, you will see this is the last gap up right here that came in while the market had a controlled pull-in, held a decent size of this gap, showing you bullish momentum. Then it took back the moving averages, and then this was really your spot, right as it started to wake up. And then this was, some people got here, some people went here, and now it's just slowly working its way higher above the 8th day. You come here and take a look at the macro chart. It's now, been public for a while, so it's in safe hands. Nice wedge type pattern on its way. Hard to buy up here, but again, if you're a macro investor and you buy right, you've had a few different situations where you could have. Okay, right here when it broke this downtrend, came back, retested it, and then could have been re-energized right there, and then there you go. So at this particular point, I think there's a lot to like with LinkedIn, and just again, I would have a little less in the 120s versus more.
All right, let's do some quick hits here. GLD looking a little tired yesterday, but did not take half of the big move away from itself on Thursday. So does it look good going forward?
Yes, I think the dips will be viable. August 20th, August 21st, that was when it ignited. It's had about 4 or 5 little flag type patterns, and then yesterday, after hitting resistance, pulled in a little bit, broke that flag. Same thing here. 8-day moving average, almost a little closer to 21 has been holding. So that's when I'm going to look to see if I can get back involved. Take a look at the chart here. You will see, from where it broke out to bigger resistance. Look at the twin peaks right here. Why would it just bust right through it? You take a closer look, and you will see that again. It did get extended from the 8-day. Here is, it paused, broke it. Some guys actually made money short this. I would say let's look to see if we hold around the 8-day. This is a little bit closer to 168. This, to me, would be a decent spot. If you want to pivot, use yesterday's low of 170.06 as that type of pivot if it opens down and goes positive.
A lot of buzz about Jazz jumping almost 15% on a federal court ruling largely in its favor. So after such a massive gain, how do you play that?
I think you avoid it. A lot of guys yesterday, it was a quiet day, Rosh Hashanah. I was in for half a day, and they're like, Jazz, Jazz, and everyone's looking at it, and rightly so. Look at the chart here. Look at this wide range expansion bar. This is a crazy move. It's a very highly shorted stock. Here is a nice little flag type pattern. So you know what? I'm a little upset with myself. I did not see this because you had this wide range bar here that woke it up, that engulfed this entire range, and then it flagged right here. So I should have been all over this when this thing went above 49.10. I'm glad a lot of people in my community were. It closed near the highs. So I guess to see if there's any continuation, 2 things. First, you have yesterday's high that you could use as a pivot if it trades through. And then if it wants to pull back, let's see if it holds the top third or maybe half. You could even go like this if you want to be a little fancier. You can go to the Fibonacci retracements of this move, and you go all the way up. And then all of a sudden, you can measure to see if there's any commitment to it or if it was too much excitement. And here's your 25% retracement. Here's your 38 right around that line. Look, my eye's pretty good still. Not the old dog who's turning 40 on Friday. Anyway, there you go, right there. So I would say 53 or so, that'd be a nice little spot. And look at these nice little tool belt I have there.
Very nice. And Facebook closed above Friday's low, keeping higher highs and higher lows over the last few sessions. So what are levels to watch here?
Yesterday we came in, everyone was excited. Finally, the media started getting excited again, and after a move from like 18 and change to almost 22, it was gapped up like 60 cents, and people are like, what do I do? I'm like, you probably better sell than buy, as 23 is resistance. So if you look at the chart, a lot of nice entries since this area. This was entry number 1 when they announced that Zuckerberg was going to stay the course for a year. Here is really the technical entry when it started to break above 1940. And then you had the nice gap up on his little presentation. Then yesterday, look what happened. Oh my goodness, resistance right at the 50-day. So at this particular point, I would say, I'm not in Facebook. I'm going to try and look to buy back also. I did tweet yesterday that I'd rather buy a little bit closer to 21.30, and what is that? The 8-day moving average is right around 20.50. So somewhere between 20.50 and 21. If this stock wants to stay with the momentum that it's had, it should hold above this area right here.
And a quick drop in oil yesterday. United States oil fell 3%. Where's the next support level here?
If you look at the USO, you'll see that this was a little bit more potent than most things yesterday. Not sure what it's going to lead to or what it means, but all I know is if you chased it last week, you got a little hurt. You look at USO, which doesn't really correlate great. It came in, tested this support. It's actually within the 8 and 21 days, so it's not as strong as the rest of the market. 50-day moving average comes in right around here. So I would think that this 34.66 should act as some type of support. That's what happened right in here as it broke the 21 and 8. So there you go right here, bigger support, but it's going to have to get through here first.
Okay, so wrapping things up today, where's your focus heading into trading today?
My focus is, Friday, you could have sold the extension, put on a cute short. Yesterday, some guys probably added to it. Today on the 3rd day is a day to take some off. So I'm going to try and cover my cute spider short, the rest of it into maybe 146 in the spiders. Going to trim some Apple, going to see if Google breaks out. I'm going to see on this 3rd day if the banks are viable. So I'm going to continue to try and maneuver positions. Traders that are having success are holding 6 to 8 positions or 3 to 5 positions with a hedge. So this way when the market pulls back, they could add to the positions they like. And they could also have something working for them like a spider short. So now we just went from what, 148.10 to almost 146. That's $2 in the spiders. So if you sold in, if you added hedges into that extension, you actually made some money back as some of your stocks probably pulled in and you buy. But if you're like me, where Apple goes up and the spider still pulled in, that doesn't happen often. But typically, you need to have some protection.
All right. And with that said, happy trading, everyone, and have a great day.